Preston, we're going to go ahead and welcome in our last live guest of the day.
Yeah, so Tyler and I connected on LinkedIn. I had a post that I made about the bullwhip effect. We've been talking a lot, as we talked about market updates and things, been talking a lot about supply chain, the bullwhip effect, what it's going to mean for OEMs, what it's going to mean for the secondary market. And Tyler had some opinions, wanted to come on and share some. So we're going to welcome Tyler Holt on. Tyler, welcome to BusinessAir TV.
For having me on.
So let's talk about this this post, and I think the guys in the studio have this graphic ready to get pulled up. But we talked about the bullwhip effect, right? So if you consider the bullwhip effect, you have undersupply, and then you have oversupply, and it creates kind of this ripple throughout the economy. So we've got it showing on the screen here. A lot of people are saying that we're here, right, where demand has now bottomed out and the supply is about to over-index. So walk us through what you think. You had a bit of a different take that we've already gone through this. We're already in a bit of a general aviation recession. So walk us through what you're seeing.
Certainly, yeah. If you look at like aircraft inventory, jets specifically, that's mainly what we deal in. This has already happened back in, say, late spring or early summer. So inventory has already risen about 25% from July. And prices, if you overlay it on the same graph, you can see that prices are already starting to barrel over and trend downward. And meanwhile, inventory is rising. Some of the inventory is probably just sellers trying to take advantage of high prices. So that may be a little bit deceiving, but in any event, there's no question that the inventory has already risen, and it'll probably continue to do so through probably all of 2023, if not certainly the first half and going into the second half.
So let's talk about the different inputs that go into this. So you have supply and demand, which is kind of, the tier one of understanding this picture. You also have interest rates, which is opposite from what we see in consumer markets that we see in the business jet. Actually, when cash is more valuable, financing options become more attractive, not less attractive. So as risk-free rates rise, a lot of these folks are not buying aircraft in cash. Does that have any effect on overall pricing in the business jet market?
It's hard to say. A lot of these clients are case by case. Their financials are very complex. Some of it, a lot of clients finance based on their financial assets, which in a lot of cases is the stock market. And if you look at what's happened to that in probably the past year, the value of those assets has fallen quite a bit. So certainly the interest rates play into that, and the value of the cash, being more valuable will drive people to financing for sure. But I think it's more of a product of the uncertainty of all of it, driving people to hold off, not necessarily walk away from private aviation entirely, just sitting on the sidelines and waiting to see what the next 3, 6, 9 months holds.
So what that's doing is that's actually drying up some of that demand, which I guess Jerome Powell is having his way in pushing inflation down, because some of the factors of inflation are supply and demand. It's also some of this idea of credit and waiting on the sidelines to be able to see. What's the profile of buyer that you see? Is it primarily those that use use personal aviation for pleasure that are sitting on the sidelines, or is it also some of those businesses that sit on the fence and maybe they're going to choose to charter, use fractional for the rest of the year?
Yeah, it's across the board. Not much of a difference. Pretty much everybody is at least, if not holding off entirely, at least being much more diligent. And towards the first half of last year and even the latter half of 2021, you had people buying, just throwing caution into the wind, just throwing money at airplanes. And now, at the very least, across the board, whether it's private using for pleasure or a business owner using or company using it for business purposes, really everyone is being at the very least way more cautious, way more diligent, and if not just waiting for 6 to 9 months. But there's probably not much of a difference between private individuals buying for pleasure or businesses for business use. It's across the board.
So how about those that, threw caution to the wind and went ahead and bought them? What are they looking at as far as, are they upside down on those investments? What are they thinking about? Is it one of those situations where they can just hold it forever, or not forever, but, relatively for a long time horizon, 7 to 10 years, and hope that either they get useful life out of it or it appreciates at some point? Or some of those that bought in H1 of this year, are they upside down on their airplanes, metaphorically speaking? Not physically speaking?
Yeah, sure. Yeah. That'd be something, wouldn't it? Yes. So a lot of people will be upside down if they're not already, but you had so much cash flooded into the system in, last year and the year before, well, really ever since COVID. And even though values may be lower, a lot of people still have a ton of equity. The folks that I think are probably, the most concerning, department are people who chase the charter market, buying airplanes at high prices on thin margins. And now that their rates are rising, fuel's rising, those people I think are in a little bit of a dangerous category, because as charter demand falls, many of those people were operating on slim margins to begin with. Those people could be forced to selling, which will drive up inventory and lower prices. But a lot of that is almost impossible to predict. But I would say that the people who bought airplanes for charter use on slim margins are the most at risk for being upside down on their mortgages, basically, on their loans.
So what happens if one of the big players crumbles? There is probably 4 major operators out there that if their entire fleet hit the market today would really cause some concerning times. And we're rolling through in Q1 here of 23. I still hear people debating whether we're in a recession. I think that is probably at this point a non-contentious issue, and we may not even have felt the full effects in the charter market. If one of those big players crumbles and their inventory all of a sudden floods the market, what does that mean for the rest of the industry? Is there going to be another large player that sees that as an opportunity, or does it just drive everybody's prices down and might have a domino effect?
Sure. Can you still hear me?
I can, yep. Can you hear us?
Okay, very good. Yeah, so I guess some of it has to do with, if a domino were to fall, which one is it? Certainly you have a lot of the big companies are really well positioned. So for instance, NetJets, if you had a smaller player fall, you might see bigger players come in and try to scoop them up. You're going to drive down. I don't know that any one charter company has such a disproportionate share of the market that it's going to cause any kind of mass event. That seems to be a little unlikely to me. But you certainly could have pockets where that happens. Like, for instance, some operators operate Citation 10s, like a bunch of Citation 10s. If you had an issue where an operator went under and it forced into a given market, like a model market, you could have severe down pressure in pockets. Maybe not necessarily broadly, but certainly market by market. And the one that comes to mind, Mountain Aviation, which I think was bought out by Wheels Up, they operate a lot of Citation 10s. And if you saw a situation where all of those had to be liquidated, I'm not saying that will happen at all, but if it did, it would drive down prices in that market, but it probably wouldn't spill over to anything else beyond that.
So essentially, a lot of these charter operators that are very model contingent, you know, I know that there are some that like to fly the XLS. There's a few that, you know, like to fly in the Gulfstream family. And so, but that wouldn't necessarily affect outside of those models because they're so concentrated. Is that kind of what you're getting at?
Yeah, probably so. I mean, the market is really large, and even the largest charter operators aren't really, you know, are going to be effectively a drop in the bucket. However, if you happen to own an airplane or operate an airplane in a market where someone does have a large presence, like the XLSs, like you mentioned, or whatever it may be, it could have a really big impact in those markets, no doubt. But I don't know that it would trickle out to anything beyond that, just because the market is so large.
Tyler, it has been super helpful to have your firsthand opinion. If they want to find out more about you or learn about your company, where can they go?
AvSkyJets.com is our website, and they can pretty much find out anything they'd like to know about us from there, and our contact information is there.
Awesome, Tyler. Thank you so much for coming on.
Yeah, thank you.
And we'll check in to see how much these predictions come through in the second half of this year.